Let's take a look at Money Matters. Local traders trading in the green so far this afternoon. That's after South Africa's leading business cycle indicator went down 1.7% from a month earlier in May 2023. Simon Brown is JustOneLap founder. He joins us for an overview of the latest business news. Simon, thank you very much for your time this afternoon. So the rand is trading firmly to the dollar so far today. What sentiment is the currency tracking?
So this is a weird one. I mean, it's trading 17.64 against the dollar. Usually I would tell you that we're seeing some dollar weakness, but we're not. We're actually seeing dollar strength. I might say that there was commodities rising and that was helping the rand. We're not really seeing that either. It is just good old-fashioned foreigners buying into our market. Probably buying equities, maybe a bit of bonds as well, but it is just money flowing in. There's no sort of a point that's beyond our control. This time it is investors out there saying, we actually want to invest some money into South Africa. So all-round positive news.
All-round positive news. And I must pick your brain on this because we were speaking to Martin about it, right? Bloomberg noting that South Africa is on the brink of collapse. What's your observation?
I think, the brink of collapse, I think, is taking it far. Certainly, it is a tough place. It has been. I mean, if we're on the brink, we've been on that brink for a long time. Load shedding now, we're into our 13th of pretty much continuous load shedding. Where I live in Joburg, water sometimes just disappears for a day. We certainly got challenges. But as a investment destination, if we look at the companies on the JSE, in many cases, some of them are really struggling. Many of them are making their money beyond the borders of South Africa. That's about 2/3 of the profit. And then there's companies locally, and we can touch on in a moment, Shoprite, who, notwithstanding tough conditions, came out with a really good-looking trading update.
Just a few days ago, South Africa was recognized as the supreme tourist destination, meaning that this country is the best to visit in the world. Let's take a look at the African Development Bank. It's released its Southern Africa Regional Economic Outlook report. Help us make sense of the findings and how the South is faring in comparison to other regions.
Well, unfortunately, we're the drag in that regard. They're relatively positive around South Africa generally, but we are one of the dominant economies along with Nigeria in Central Africa, and then, of course, Kenya up in the north. And we just can't get that GDP growth going. They're looking at around 2%. I think that might actually be a little bit generous in that regard. And if you look at, particularly, for example, SADC, SADC is actually coming in fairly well, and we're seeing a number of economies in the continent growing at good numbers. We've got, a fair number, well above 5 and 6%. The average for the continent at 4.1%. Different parts, if you break it down, Central Africa at 5, West at 3.8, North Africa 4.1, and then unfortunately, as I said, down in Southern Africa, which is us, we're dragging not just our region, but we're dragging the continent down at the same time.
Sheesh, what do we put that down to?
I think it is. Back to the earlier point. Load shedding is absolutely hurting. We're not seeing any growth coming through. At best this year, maybe we're going to do 0.5% GDP growth. Our population growth is probably 1.5%. So every individual in the country is getting poorer as a result. And it is more than anything. It is the power situation. The rand doesn't help. If we go back to grey listing, not helping either. We saw the Lady R rand out at 1950 when that happened. The strengthening in the rand is going to help things a little bit, not massively. And then the big one is commodities, beyond our control, but higher commodity prices, whether it be gold, whether it be the PGMs or the industrials such as coal, manganese, those really benefit us when those prices are moving higher.
You mentioned Shoprite. It has posted an operational update for the 52 weeks to the 2nd of July. How have they fared in the period under review?
A good update. So the bad news up front, they spent 1.1 billion rand on diesel during the period for generators to run their stores, keep the lights on, the tools operating, and importantly, keep the chill rooms working so that our frozen pizzas remain frozen and our milk remains fresh. But beyond that, a good update in tough conditions. They saw like-for-like growth, in other words, excluding new growth, new stores in South Africa of around 10%. If we take inflation out of the equation, that was at 10.1. So they're flat on the period. But if you compare that to Pick n Pay from last week, Pick n Pay were down around 10% in terms of sales. What Shoprite didn't show us, they didn't give us any indication of profitability, headline earnings and the like, but under what are trying conditions, not just for the group, but of course their consumers who are experiencing high transport costs, high inflation and high interest rates, a commendable set of results. And the market is appreciating it, putting the stock up 3%.
As you mentioned, South Africa is apparently the best place to visit in the world. Is that reflected in Stats SA's publishing of the latest tourism and migration data for June?
It is and it isn't. So we certainly are improving. So the June month compared to May is a little bit down. That's understandable as we move into winter. June is typically the weakest month of the year and then starts to pick up again towards the end of the year. And if we look compared to last year, in other words, June this year to June last year, we certainly are picking up and we're seeing a lot more tourists coming in. And that includes tourists from within the African continent, as well, of course, Europe, North America, and other parts of the world. Where the concern perhaps is that we're still lagging the 2019 tourism numbers. We haven't yet fully recovered from the pandemic. We're certainly ahead of 2021. We're ahead of 2022. We just need to get back to that pre-pandemic to really see that boom. Because to your point, the foreigners love us. We're a cheap destination and we're a high quality destination, and it really would help with unemployment. It'll help with the currency, and of course it'll help with growth within the economy.
A cheap, high-quality destination with no electricity, Simon?
I hear you on that. I had family out from February, and they were staying in Cape Town, and the load shedding didn't bother them, and they kind of worked around it. Is it ideal? Not in the slightest. But the apartment block they were in worked fine, and the restaurants they were going to manage, and of course, they were there for the outdoors as well.
We've got a lot to give. It's always a give and take situation, isn't it, in life? Thank you very much, Simon Brown, JustOneLap founder. More news for you in a few moments.